Nike shares up nicely today, about 4%. Profit and revenue beat Wall Street expectations, signaling turnaround efforts at the company may be taking hold. Sales grew about 1% from the same quarter a year ago, surprising analysts. Nike expects current quarter revenue, though, to fall by low single-digit percentages, in line with where the street was anyway. On the topic of tariffs, and that has a lot to do with this, Nike said it expects a hit of $1.5 billion and a gross margin impact of 1.2 percentage points in fiscal 2026, and that's higher than projections that Nike gave in June. Joining us now with more on the quarter, Barclays analyst Adrienne Yih. Adrienne, I was going to look at a 5-year chart too, because this is a long-term efforts at a turnaround, obviously, and I don't know. I put that in my go woke, go broke portfolio, but maybe that's not everything. There's a lot of other things that obviously are wrong or have been problems for Nike at this point. Do you see glimmers of a turnaround happening yet?
Yeah, it's so funny. We were looking at the 5-year chart as well, and you'd be pretty much dead even, if not a shade, lower. So very frustrating for investors. This is what I would say. Absolutely, we do see glimmers of hope. And what I would say is we're not expecting Nike to ever get back to the status and the domination of kind of global sporting goods that it had been. I mean, you didn't have On running before, you didn't have Hoka. And so the world's just totally different. The last time that the company was at 14% operating margins, they were at roughly $38 billion, right? So they went to $50 billion, but they basically, the margins, basically kind of collapsed under that weight. And so now we're sitting here at about a 5, maybe 6% operating margin for the fiscal year, if you're being generous. And we're trying to get back to 10%. So in the world that we see, right, there's a real reality that you get back to 45 billion and you get back to 10 to 12% operating margins. But from here, there's some very, very low hanging fruit, and there's an opportunity to make money. We are still at equal weight, just because the valuation, basically the earnings now needs to grow into the valuation, and you don't grow into a valuation by beating the quarter and then lowering the full year. And that's basically what we expect to happen. Earnings revisions are coming down for the fiscal 26 for sure.
Nike picked the wrong time to try to be boosting margins, didn't it?
And raising prices, right? Raising prices
and tariffs. We're trying to improve our margins, which a lot of these problems were pre-tariff, but now they're finally getting it together and trying to improve their margins in the face of of tariffs, and it's still uncertain exactly what it's going to look like.
Well, I mean, it's the tariffs that are pressuring the margin, so that's 100% underwritten into the shares. But the horizon of uncertainty is really, no one really ever talks about. We talk about we can raise prices, the consumer is taking those prices, the consumer is weakening, right? It is clear day by day, quarter by quarter, that the consumer is weakening. And really the horizon of risk on demand elasticity sits right over the calendar year end, right? So it looks like we're having a decent third quarter. They'll kind of like muddle their way through a mediocre holiday. And then broad scale consumer discretionary goods are going to be raising their prices to offset the full impact of the tariffs that are now going to sit on the balance sheet at the beginning of the year. That's a really tough headwind to kind of play into.
You point out that the channels, the wholesale channels, you don't even really look at quarters. It's in seasons for
Yes.
Nike. And they had what you refer to the worst pressure from the reset actions. What did they do? How did they try to reset things?
Yeah, so in wholesale, unlike retail, we look at 2 quarters together, right? So right now we're looking at their fiscal first half, which was end of July and then into November. Typically, those half years look very similar, margin pressure, et cetera. So last year, in the back half of last year, they did their reset actions. They pulled 15 to 30% of the classics out of the marketplace channel, so out of the retail partners, basically creating kind of a void, right, of product. And then you had to wait a year, and this year they will be going and restocking or refilling that pipeline with the new innovation product. When they brought all that inventory back, quote unquote, home, you call it return to the vendor, take it out of the marketplace and bring it back to Nike's balance sheet. They then have to liquidate that. And they liquidate that through the off-price channel. They liquidate that through factory stores. But you get in your DTC, you get ridiculously low margins. So you're compounding the effect of sort of deleverage on your fixed expenses with having these, kind of very, very low product margins as you liquidate this product. They will be anniversarying those 2 quarters beginning in February, and the worst of it was in May. Very often when you clean up the inventory, and that was the one positive key here on the print, was that their sales dollar growth was faster than inventory for the first time in many, many quarters. That'll give them a nice base on kind of merchandise margin. So if there's any kind of positive, we're still at equal weight. We think the valuation is a little bit too rich for numbers coming down. I would say you really do want to keep that powder dry. Right. And as we go into kind of the February quarter print and the May quarter print, that's some pretty easy low hanging fruit to anniversary, especially if we've already lowered the numbers 1 or 2 more times.
It's at the high end of its range, I guess you're saying, too. So equal weight, you don't have like a $100 price target at this point on Nike.
I can see the stock trading sort of between. So I don't think you're going to have much downside for those people who want to be a little bit early and they're seeing some stability in the win now strategy that they're executing. I don't actually see the stock breaking much, getting much below our price target. We're at about 70. I think that's kind of a near-term floor. And but I don't see the stock trading much above 75 either. So we're kind of in this holding pattern. The things that they can control, they're doing. But boy, what you said at the beginning, at the opening, they can't control the macro. And the macro is full of uncertainty. And it's hard to do a turnaround into macro headwinds of many different layers.